You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 15th day of August, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first live broadcast, that's our live training room. So that's reserved for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, go to mytradingiq.com. and just click the purple button at the top of the page. Now, it doesn't matter what day of the week or weekend or hour of the day that you sign up for the trial. You will get 5 consecutive trading days. So the weekend doesn't count against you. If you were to sign up today, Thursday, we'll get your desktop set up and your indicators indicating today. The trial will officially start tomorrow, Friday, and it will run all the way through next Thursday. So again, the weekends don't count against you. When the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and we come back for the afternoon broadcast, this broadcast, which is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join the afternoon broadcast live. The best way, you only have to do this once. Go to mytradingiq.com, scroll down the page to where it says Noon Broadcast. Click that link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In that email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. Benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days when you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy and can't join live, but want to get caught up later. You can do both of those via our YouTube channel. It's very easy to remember, youtube.com/CFRN. You've already got the YouTube part memorized, so all you need to remember is CFRN. Not only do we broadcast live every trading day on our YouTube channel, we also archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived, for your educational and viewing pleasure. And thanks to the power of YouTube, it's a great way to get to know who we really are. Not just today, not just this week, but you can scroll back 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, but pick some days at random. Watch a little bit, fast forward a little bit, watch a little bit, jump to another day, week, month, year, do the same thing. You get the idea. youtube.com/CFRN. This is our daily schedule each and every day. So we're going to jump into our daily devotional. The topic we've been on for the past 7 days is crashing the chatterbox. The chatterbox in this context is that endless loop that plays in your mind. I'm not good enough, tall enough, pretty enough, wealthy enough. But that's not what God says. So the purpose of this devotion, past 7 days, including today, is to crash that chatterbox. Today's scripture is 2 Corinthians 5:11-15. I'm going to share it with you from the Message translation. Beginning in verse 11, that keeps us vigilant. You can be sure. It's no light thing to know that we'll all one day stand in that place of judgment. That's why we work urgently with everyone we meet to get them ready to face God. God alone knows how we'll do this, but I hope you realize how much and deeply we care. We're not saying this to make ourselves look good to you. We just thought it would make you feel good, proud even, that we're on your side, and not just nice to your face as so many people are. If I acted crazy, I did it for God. If I acted overly serious, I did it for you. Christ's love has moved me to such extremes. His love was the first and last word in everything we do. Our firm decision is to work from this focused center. One man died for everyone. That puts everyone in the same boat. He included everyone in his death so that everyone could be included in his life. A resurrection life. A far better life than people ever lived on their own. Again, that was 2 Corinthians chapter 5, verses 11-14. So, as humbling as it may be, it's important to understand it's not just about you. You're not the only person fighting off the internal chatterbox. Keeps you from hearing God's voice above all others. People around you are locked in the same battle. We live in a world full of chatter. And I believe every person you make eye contact with has wrestled with the same lies. Now, you can't crash their chatterbox for them, but you can share these tools and start a chain reaction of chatterboxers who will stop at nothing to drown out the noise of the enemy with the truth of God's Word. God's potential is limitless. So start the conversation. Have coffee with a friend. encourage someone going through a hard time, or even start a small group to study crashing the chatterbox together. I'm calling all chatterboxers right now. Lace up the gloves, join the fight. Chatterbox can be crashed on a daily basis. You have the tools to do it. Join me in a word of prayer. Heavenly Father, thank you for teaching us how to hear your voice and for giving us an opportunity to help others do the same. Your love doesn't just change us, it compels us to help others change. Give us an opportunity today to encourage someone close to us. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen. Happy Thursday. Speaking of Thursday, tonight is our members only workshop. So if you've been on the trial this past week and you want to be in the members only workshop tonight, you should have received an email yesterday. You'll probably get another one today with instructions on how you can become a member and make sure you get an invitation to the workshop tonight. Let's go over the numbers from around the world. We'll start here in the U.S. The cash markets, or the indices as they're called. The Dow is up 480 points. It's almost 1.25%. The NASDAQ is up 364 points, 2.25%. S&P 500 is up 78, 1.5%. The Russell 2000, our man in the street, up 52 points, which is 2.5%. Needless to say, it's a bullish day on Wall Street. I would be amiss if I didn't caution you on what's to come. Crude oil up $1.41, trading 78.39 last. That's a gain of almost 2%. Gold is up $16.90. Silver is up $1.18, trading 28.52 last. That's a gain of almost 4.5%. Now, important to note here, when the price of silver moves $1 in either direction, that's worth $5,000 per contract traded. And again, at the moment, silver is up $1.18 on the session. In the Asian markets, at the close, the Nikkei posted a gain of 284 points. The Shanghai rose 26, which for the Shanghai is almost 1%. The Hang Seng dropped, but only 4 points. And in the European markets at the close, FTSE up 66, almost 1%. The DAX rose 296 points, which is well over 1.5%. And the CAC gained 90 points, which is 1.25%. So we had a mixed day in Asia. That's only because the Hang Seng was down 4 points. It was a green day for the UK, and it's definitely a green Radio Thursday here in the US of A. So with that, let's head over to some news. Let's see what's driving this market. 2 economic data releases cooled recession worries this morning as investors continue to debate how quickly the Federal Reserve should cut interest rates. Retail sales rose 1% in July. That's according to new Census Bureau data, above Wall Street's expectations for 0.4%. Meanwhile, initial filings for unemployment insurance fell more than expected last week. Now, what that data doesn't tell you is how much of those retail sales were racked up on credit cards, which many people know they're going to default on eventually. So, hey, it's not my money. Why not spend it? Not that that's the proper way to think, but sadly, it's how many do. I'll never forget the first time back in the 80s that I walked into a grocery store and there was a new checkout line where you could actually use your credit card to buy groceries. Now, that literally stopped me in my steps, because before that, no one would have ever dreamed of buying groceries on their credit card. That was for major expenses, unexpected car repairs, that type of thing. But now it's a very common thing. In fact, a lot of places won't even take cash anymore. The new data we got from the Department of Labor showed there were 227,000 initial jobless claims filed in the week ending August 10th, down from 234,000 the week prior, and below the 235,000 that economists expected. 2 reports fight back against concerns of a looming significant slowdown in the U.S. economy following a weaker than expected July jobs report. And that spawned the worst stock market sell-off of the year. Stocks came roaring back today, with all 3 of the major averages rising. We look at all 4, the S&P, the Dow, the Russell, and the NQ. In fact, the S&P 500 is headed for its best weekly return in 9 months. Now, according to the Chief Investment Officer at BMO Wealth Management, all of a sudden things have come together. And what seems like almost a Goldilocks scenario for the data is a tremendous shift from what we had a week or so ago when we had the market sell-off. Now, I have to ask this question. What's changed? These numbers that we get, these econ reports, you have to take those with a grain of salt. Within the details of Thursday's retail sales report, economists had few qualms. July sales, excluding auto and gas, rose 0.4%, above consensus estimates for a 0.2% increase. The control group in Tuesday's release, which excludes several volatile categories and factors into the gross domestic product reading for the quarter, increased 0.3% in July, above estimates for a 0.1% increase. Motor vehicle and parts dealers led the gains by category, rising 3.6%, while electronic and appliance store sales popped 1.6%. And again, my question is, how much of that was on plastic? And I'm not referring to your debit card. That's as close as you get to real money these days, if there is such a thing as real money. There was almost nothing in the July retail sales report for the perma bears to latch onto. Rebound in retail sales led by a recovery in vehicle sales, but encouragingly broad-based, with control group sales rising even further. The Biden administration released the prices of the first ever negotiated Medicare Part D prescription drugs before the market opened today. But the announcement appears to have had little impact on stocks and pre-market trading. The year-long negotiation process will yield savings of $6 billion in 2026 from net prices paid by Medicare, according to the U.S. Health Secretary. That is almost double the Congressional Budget Office estimates of $3.7 billion in the first year and $100 billion in savings over 10 years. In addition, the new prices will save seniors $1.5 billion in out-of-pocket cost. And be assured that politics has absolutely nothing to do with that. Some of you will remember Alibaba. We used to talk about it a lot. We've not talked about it a lot lately. But Alibaba missed market expectations for first quarter revenue today, as the company's domestic e-commerce sales came under pressure from cautious spending by Chinese consumers and a faltering economy. A halting economic recovery in China, coupled with a persistently weak property market and high job insecurity levels, have sapped consumer confidence and spending power in the world's number 2 economy, hitting global firms across the board. Never thought I would say it, but I think I almost am prone to believe the Chinese numbers and the American numbers. And from Wall Street, recent recession forecasts were hammered this week as data on jobs, consumer spending, inflation, and small business optimism all pointed to an economy that will continue to expand firmly into the autumn months. The Commerce Department reported today, again, retail sales were 1% higher in July, notching the best monthly gain in more than 2 years. Consumers spent more than $709 billion on everything from cars and appliances, food and clothing. Stronger than expected reading echoed a bullish near-term forecast from the world's biggest retailer, Walmart, which posted street-beating sales of just over $169 billion and lifted its full-year profit forecast, adding that it continues to see firm spending trends over the first 2 weeks of August. And from Bloomberg, a second liquefied natural gas tanker left an export terminal in northern Russia that's subject to U.S. sanctions. The Asaya Energy, part of a suspected dark fleet of vessels assembled by Moscow to take gas to willing buyers, is now heading west after satellite images showed the ship at the Arctic LNG-2 plant last weekend. Traders are closely tracking activity at the terminal, which was slapped with sanctions last year that prevented delivery of the ICE-class tankers needed to export the LNG. That's liquid natural gas. Yet earlier this month, the tanker set off from the plant, suggesting Russia's managed to circumvent the curbs using its shadow fleet. Well, you can thank the commander-in-chief for that. Golub Capital is boosting its trading of private credit deals. According to people familiar with the matter, the latest evidence of growing interest among some industry players in developing a secondary market for direct loans. The firm traded about $1 billion of private debt through the first half of the year, according to the people who asked not to be named because they're not authorized to speak publicly. And no one wants you to know how bad this situation is. I'm reminded of the mortgage-backed securities back in 2005, 6, and 7, which led to what has become called the Big Recession. Industry insiders broadly say Golub is among the most active participants in the space, which includes the likes of JP Morgan and others. The buying and selling of loans remains relatively rare in the $1.7 trillion private credit market, where most lenders typically hold debt until maturity. Still, there are signs that transactions are picking up as investors seek the ability to swiftly enter and exit positions, be it due to liquidity constraints or a desire to free up capital for new investments. In some cases, it can offer opportunities to offload more stressed credits. JP Morgan recently sought to broker trades in the debt of Pluralsight, a struggling workforce development company. Co-founder of Monarch Alternative Capital said, "Private credit has proliferated. It's become so big that it's rivaling the broadly syndicated market. You're going to see some trading, people looking for liquidity and to de-risk." In an emailed response to questions sent by Bloomberg, a representative for Golub said that the firm offers private equity sponsors numerous financing capabilities, including providing liquidity primarily through new issue trading activity to those who find this differentiated offering valuable. While many view secondary trading as a natural evolution of private credit, similar to the growth of the leveraged loan market over the past few decades, not everyone is convinced. Some say it undermines the value proposition of direct lending, including the convenience of dealing with just a handful of lenders, the ability to keep details of loans private, and the price stability a lack of trading affords. Borrowers don't want it because the expectation for most private credit borrowers is that they know and have a say in who holds the loan. Lenders that plan to sell down a portion of the position generally don't like the idea of losing control of the sell down effort because they want to know who will be in the loan with them. And that's the news that's fit to read. Big day on Wall Street. Can't deny that. Logic 247. It's our 24/7 around the clock Emini alert service. And it looks like we need some editing here. We have 50 total alerts issued, 2 deemed never triggered. Still waiting on the outcome of 12. Plus we had some additional alerts this morning. It gave us 36 actionable alerts with 10 stop outs, which puts us at 28% of actionable alerts stopped out. Now, over the last 315 weeks, we've averaged 20% or less of actionable alerts being stopped out based on market structure and a very simple process that we teach all of our passport holders. Over the last 315 weeks, we've now issued over 17,600 individual handcrafted alerts. And we've averaged on a weekly basis 20% or less being stopped out. So sitting at 28% on a Thursday, I know there's some changes because this recap was done at 7 a.m. Eastern. News didn't come out till 8:30 a.m. Eastern. So this afternoon, Valerie will update the recap, and we'll see where we sit then. Based on 315 weeks of history, we should work our way down to 20% or less. But last week we had over 80 alerts with only 6% stopped out. So this is the truth about trading. When things don't go the way we expected or hoped, we don't sweep it under the carpet. We put it on full display. Why? Number one, it's the truth about trading. And number two, it's the opposite of what most people do in this space. So, the logic alerts can come out anytime around the clock. Futures trade around the clock, and we have traders around the globe. So you could get a logic alert at 2 a.m. or 2 p.m. as opportunity presents itself. The logic alerts have an entry price, an initial target, additional targets, and a final trade to target. The logic alerts are designed to help you learn how to read a chart. If your goal is to trade for a living, and that's our goal for you, you got to become self-sufficient. As long as you're depending on someone else or something other than a chart to tell you when to get in and when to get out, chances of you ever trading for a living are quite slim. So again, the purpose of the logic alerts is not just to trade them, so you don't have to learn how to trade. They're a tool that helps you learn to read the chart, and once you can read the chart, then you can learn how to trade. Now, we started logic, as I said, 315 weeks ago. But prior to that, we had our concierge trade alerts, which are a little bit different in a couple different ways. Number one, they don't come out around the clock. They're published as a static report shortly after the Globex open each evening. Today is the Thursday session, but the Thursday session began last night at 6 p.m. Eastern. So 15 minutes after the open last night, all of our members and trial members had all of these targets. The first thing you want to do when this report comes out is to go to the 30-minute chart of the markets you actually trade. Make a note on the 30-minute chart where price is at the time the report is released. It will always be between these two numbers. Then draw a line in the sand at the long target, line in the sand at the short target. Those will serve as valuable clues as to which side of the street you should be on. If price rises above the 30-minute BBC, that tells you it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. That's pretty simple. BBC is the green line on all of my charts. Stands for bull, bear, cross. When price crosses above the green line, then we're bullish and anticipate higher prices. Price crosses below the green line, then we're bearish and anticipate lower prices. Now, the markets are fractal in nature, so you can apply the BBC to any market, futures, stocks, crypto, Forex, ETF, any time frame, daily, weekly, monthly, 30-minute, 5-minute, tick chart, range chart. It functions the same no matter where you put it. Price closes above it, expect higher prices. Price closes below the green line, expect lower prices. This is where you learn to look left to spot those additional targets and the entry price, the initial target, which is designed to help you get your goal for the day, and the additional targets. Consider them targets. You can consider them support or resistance, depending upon if it's a long or short trade. And at this point, you should learn or be learning how price behaves at a weekly trading zone. Price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon. Price is above the BBC on the 30-minute chart. It's trying to get to the weekly zone above. Price is below the BBC on the 30-minute chart. It's trying to get to the zone below. Now, there's nothing magic about 30 minutes. It's simply the time frame I chose years ago, and I've stayed with it, because if it's not broke, you should probably leave it alone. We've published the zones for our members since December 14th of 2009, closing in on 15 years. They come out Monday morning at 6:15 a.m. Eastern, and once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. You just have to resist the urge to complicate things. Trading is not easy, but it can be simple. And as long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. So let's take a look at the daily chart of the bellwether, the S&P 500. We talked about this yesterday. We were in an uptrend, and then we began what looked like a downtrend. Leg, retracement to the BBC. This is the green line, bull bear cross. Bearish below it, bullish above it. The pullback to the BBC holds more often than it doesn't. But eventually, we know price will trade through. So we had a leg and a retracement, a leg and a retracement, a leg and a retracement. And as I talked about yesterday, what appeared to be the beginning of a downtrend, if we overcame the BBC 38% fib retracement, that would lead us up to the lowest fib extension, and then the 24% fib retracement, which we're currently trading slightly above. The next resistance is at the 24% fib extension, and then the high of August 1st at 5,603 quarters. That takes us up then to the 38% fib extension and this pullback high of July 23rd. And we've got the 50% fib extension, the 62, and the all-time historic high. If this turns into a head fake, this will be one of the biggest head fakes I've seen in my lifetime. Now, this bullish cross served as good support all last week, but traders have thrown caution to the wind. I think politics may play a slight role in this, but this is not a political show. So where should you expect? Obviously, the wind is blowing north, as it was yesterday and the day prior. We had two small daily candles here, indecision at the 50% fib retracement. Now we're gunning for the 24% fib extension, the high of August 1st. Then the next would be the 38% fib extension. Now we've spiked the 24% fib retracement. The question is, of course, will we close above it today? That part remains to be seen. Now on a retracement, because the pullback holds more often than it doesn't, whether you're pulling from below or above, a retracement back to the BBC now would be seen as potential support. We've got blue and climbing, and that increases the potential for higher prices, at least up to 5,603 quarters. I'm showing you the daily chart because institutional traders, the ones who actually move price, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It all has to do with account size. But markets are fractal in nature, so price movement is the same whether you're on a daily chart, a weekly chart, a monthly chart, 5-minute chart, a tick chart, or a range chart. But whether you trade futures or stocks or crypto or Forex or ETFs, if you'll make it a part of your daily routine to spend 2 minutes with the daily chart of whatever you're about to trade, you're looking over the shoulder of the deep pockets who move price. And it doesn't matter what reason they're moving price, whether it's the econ numbers that came out, or any other of a myriad of reasons, including politics. Our strategy and indicators are not designed to outsmart the institutions with their infinite resources. They're designed to help us clearly see what the institutional traders are doing, to give us an understanding of why, and to be able to identify major areas of resistance and support. If you'll make that part of your daily routine, I think you will see your daily results change for the better over time. All alerts are created on the 30-minute chart. The logic alerts and the concierge trade alerts. This is where we opened last night. We pulled back to the BBC. Remember, the pullback holds more often than not. Here, 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 again here. We made a run at the long target. And when it ran out of steam, price always reverts to the mean. In our case, the mean is green. It's called the BVC. Again, bull-bear cross. Bullish above it, bearish below it. So support sent us to resistance. And we spiked red and falling. But look at the structure of the market. This high lines right up with these highs after the retracement. When we hit that retracement, we go back to the BBC where we find support. That sends us to resistance at red and falling. And that pushes us down to this area right here, where we slightly overshot that low from last night. Now, this is 7 a.m. Eastern. Here's 8 o'clock. We've got the perfect stack heading into the news. Price, step line, blue and climbing, BBC. News hits, and look at that run. 130-minute candle. Now, only three things happen when price hits a weekly trading zone. 70% of the time is consolidation. 20% of the time is rejection. 10% of the time is the slice. And that's what this is. We sliced through the highest weekly trading zone. But when the move ran out of steam, we retraced to the zone we sliced through. That's what typically happens. And then we continued in the direction of the slice. Now, on the way up, you can see price, step line, blue and climbing, BBC, perfect stack. That's changed. This very well may be the high of the day, possibly the high of the week. The step line has crossed, and once the step line crosses blue and climbing, we expect price to retrace back to the BBC. Now, chances are we won't make this move in a straight line. We'll get a leg and a retracement and a leg and maybe a retracement. And by that time, the BBC may have risen to the highest weekly zone. Based on 15 years of history, we expect that price will be at or below the highest weekly trading zone by close of business tomorrow. Does that always happen? No. Does it happen more often than not? Yes. So with the step line crossing, we're printing a big red candle. Look for price to drop. First, you can simply look left and see areas where the market could potentially find support. You got these two lows here very close together. Then you're at the weekly trading zone, and that is the highest weekly zone for this week. Last week, the highest weekly zone on the ES was 57.29, way up there. So we'll see what happens as price retraces. Do we find support, which is what typically happens, pushing us up to another leg? Or does the pullback fail to hold? Because we know eventually it will. And then that would put us back below the weekly zone. On the Dow, here's where we opened last night. We're above the BVC, so we're looking for higher prices. We take out the highs of yesterday, and we run into trouble. Pull back to the BVC, spike it, but the pullback holds. And then we run right up to the highest weekly trading zone on the Dow. We spiked it, okay. We retraced back to blue and climbing, which became good support. That sent us back to the zone And we're still consolidating. 1, 2, 3, 4. Now, this high was 65. This high 57. This high 62. So we failed to take out this high. We've traded below blue and climbing. The market has found support at the step line, but because the step line has crossed, we anticipate price retracing back to the BBC. Trade every market exactly the same. Here's the open last night. We get slightly above the BBC, but not enough to take out this high. So that sends us below the BBC, and then the retracement, that's resistance times 2, red and falling in the BBC. That sends us to the zone where we consolidate for an hour and a half, and then we take a drop where we just barely take out this double bottom from yesterday. So anytime we take out a higher or low by just a little bit, we're a little bit suspicious. We get above it, and then here comes the news. And like all the other markets, because the news was very bullish, push above the highest weekly zone. Get a retracement back to the step line. We don't make it. The zone is 51.25/26. The low of this candle was 26.6, so it came within 6 ticks. Remember, on a slice, we expect price to retrace to the zone it sliced through and continue in the direction of the slice, which it has done. The step line has crossed, but it hasn't hooked down yet. Okay, but again, this may be the high for the day and possibly even the week on the Russell. On the NQ, here's the open last night. Pull back to the BBC. Pull back holds more often than not. That sends us up to the target and above. Then we get a retracement back to the BBC. Support, which sends us to resistance at red and falling. Then we come back to test the lows of early last night. Buyers come in, push us up, we get a leg, a retracement to blue and climbing. And then the news comes out, very bullish, spikes us above the highest weekly zone. And we have the same situation. Got a high of 19,570, but the step line has crossed blue and climbing. So the highest probability is that we'll see a retracement back to the BBC. And based on 15 years of history, by close of business tomorrow, we'll be at the highest weekly zone right here or below. Now, that doesn't happen on every week on every market. But more often than not, that is the case. So, Michael's going to give us a recap of what happened in the live training room this morning. Then we'll go live on TradingView and do some live trading for 30 minutes. I'll come back, I'll finish the recap of the alerts, and we'll close out, as we always do, with our good word for the day.
All right, bring it over here. There it goes.
All right, looks good.
Excellent. Excellent. Here we go. Good afternoon, everyone. Today is Thursday. Partners are meeting tonight, 8 p.m. Today is Thursday, the 15th day of August, 2024. All right, so if you have not taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. Once you click on that purple button, you will be sent to this registration page right here. And on this registration page, all that we ask for is your name, your email, your phone number, 5 multiple choice questions. If you have if you have trading, NinjaTrader, give us your machine ID. If you have TradingView, give us your login ID. Once you do that, we'll be able to enable the indicators for you, so you can get your indicators indicating at the beginning of your trial. Ideally, that's where you want to be. Okay. All right. Now the spreadsheet. If you're going to look at the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 15th day of August 2024, as I said. Today we made 68 ticks on the NQ, 25 ticks on the Russell, 25 ticks on the YM, and 15 ticks on the ES. That put us at 777.50 with one contract this morning. We were up a little bit better, but we stopped out on these two right here toward the end of the session. And those are 25 tick stop outs on those two. So today it took 7 minutes in one trade to get to $4,500. That is with 20 contracts on. All right. We had, in that particular instance, I believe, where is my sheet? I believe in that particular instance, here it is. It was the YM. And we got 45 ticks on the YM in that particular instance. And we took a total of 13 trades this morning. So on the month now, we're at $6,617. That's over 11 trading days, averaging $601 per contract per 2-hour session. On the year now, we're at 150. So we've gone 152 consecutive days of getting our goal. So every day this year, we've gotten our goal. We've now gone 67 days since our last blue day, and 314 business days since our last red day. That's 67 business days and 152 business days as well. All right. So on the year now, we're at $64,570 with one contract, averaging $424 per contract per morning session. If you were to do the 24/20 blueprint and quit trading when you get the goal for the day, and if you did that and you hit the goal every single day consistently, you would be adding one contract a month, all right? And so doing that, you'd be on your 8th contract so far this year. And if you did it just like me, you would have had to work 48.2 hours and you'd average $1,819 per hour. All right, if you started in January of last year, like I did, you'd be on your 20th contract now. Same 48.2 hours, and you'd be averaging $7,161 per hour. Okay, same time, same everything. Now we'll get into the trades. There are not a ton of trades, but we did have something on everything here. This was our YM. Now the YM is where we got it on, I believe it was right here. I think it was the very first trade, wasn't it? It took us 3 trades, right? What did I say? 1 trade. Was it 1 trade or 3 trades? Today, to get the goal. 1 trade. 7 minutes, 1 trade. All right, so let's look at the YM and see where exactly that happened. It might have been, yeah, it was the YM. 7 minutes. So we started at 28. It must have been this one right here. This one over here, it looks like it would have been 2 trades if it was this one here, and it wasn't that one. It was in here. It was 7 minutes. It must have been this one right here where I got the goal for the day. By the time it finished, it was probably 7 minutes in, and that's about right. And we picked up 45 ticks on our very first trade. And then the next trade over here, we picked up 5 more ticks to get us to 50. And then we stopped out on this one. That put us down to 25. And then we got into the lesson plan. And we had a pretty good lesson plan today. We're talking about the diamond principle a lot. But I added the diamond principle to the lesson plan for today. We talked about the no trade zones, the weekly trading zones, DT Pro, Ninja Trader, and Trading View DOMs, and how to read the DOM. We didn't really go over the Ninja Trader and Trading View DOMs all that much. It was more about how to read the DOMs than anything else today. And the weekly trading zone, it took me a little while to figure out we were above the highest weekly trading zone, but when I did, I looked at last week's zones, and the next zone up on last week on the ES is way up there. It's a long way away. So we're up in no man's land right now. And by the end of tomorrow, we should be probably back down, like I just said, back down to the weekly trading zone, the highest one. So anyway, on the YM, we stopped out on this one and we didn't take any of the trades. It was one more green arrow trade right here. Now I was showing this morning how the black arrow trades can be traded and how they're more meaningful on a larger time frame. They're more meaningful if you have a long distance to go to get up to the swing high. And so on a pullback, on a trade like this, where you have the black arrow right here, you have this much space between here and the ribbon. You know, your stop's 25 ticks. So if you wait for a pullback into this black arrow trigger bar right here, wait for a pullback back here, you can enter back here. And then if it does go down and hit the ribbon and bounce up, you'll still be in the trade for good. We were looking to do that. It was on the Russell that I stopped out on at the end of the morning session. I'll show you that in just a second. We're looking to do exactly that. And it took forever. And eventually stopped us out. But on the YM, we ended with plus 25. Okay, on this little, we'll show you that thing that I was just talking about. It was, I didn't write it in. It was the last trade of the day that we did. And maybe it wasn't on the Russell. It had to be on Russell. I don't know. Anyway, we did the same thing. We entered on the black arrow. But our trades here on the Russell today, the way it worked out, in the beginning, we took this one right here. We got a break on that. And then I took this one on the black arrow right here. Now, I didn't mean to take that one. That was an accident. I thought it was going to pull up out of the oversold right here. I took it and it got out of break even because I didn't mean to take it. And then I took the one right after it, which was a valid trade. And we got 25 ticks on the one right after it. Then over here, we picked up another 25 ticks, explained the diamond principle, got up to 50 on that. Then in here was more diamond principle explanation. And I took one more trade in there somewhere. I don't know where it is, but I stopped out on it. I think it was right in here. This is the one. This is the one at the end of the session that I ended up stopping out on. It was right here. Okay. And this is the one where I took the pullback on the black arrow. And I was saying at the time when I took it, if it pulls back and it hits the ribbon and it bounces, I'll have a great entry on the blue arrow. And it started to look like it was going to trigger it and give me the blue arrow, but it never did, and it pulled back down. And then it was looking like it could possibly give me a green arrow, but it never did. It pulled right back and stopped me out. Now, this up here is what I was projecting price should get up to. You see, did not quite make it up to that level. I told you guys I were there this morning. You did get another green arrow here. That was an okay trade to take. This made it 50% of that leg up. So what does that tell you? 50% of that leg up. Think about that. All right, I'm going to move on to the next market, the ES. Right now, we ended up with just plus 25 on the Russell. All right, and on the ES, we had a few trades. Let's look at those for a second here. On the ES, see our first trade. I don't think that was our first trade on the ES, was it? I guess it was. Our first trade on the ES was right in here, and we picked up 4 ticks on that one. And the next trade was right here, and we picked up 11 ticks, giving us plus 15. Then we had a break-even trade, and another break-even trade. And then you get into the break. There was a green arrow right here that did eventually get up to this level. But you see the time element of this, the price element and the time element all changed when it started to get sideways for so long. It never got up to here. Those of you guys that were watching this morning, this time element was based upon the information that we had at that time, but it never did get up there. All right. It was right in here as the time element I was looking at, and the price element was right here, just about got there. So it would have started over again right here. The whole thing would have started over again right here. And time element then would have gone from here to here. All right. So then the retracement, the next level would have been from there to there, and the extension of the price would have been from here. It's almost perfect, from there to there. All right, and so then the new extension would be right here. All right, using the diamond principle, the new extension would be right there. So it went a few bars more. It took a little bit longer to get there, but it was right in there. All right, for those of you guys that were watching this morning, that should make some sort of sense to you. And being able to project where price should go, when it should go, where and when, ahead of time, based on all the information that you have in front of you. So on ES, we ended up with plus 15. Okay, the NQ, we took a couple of trades on the NQ today too. I know I don't like trading the NQ that much, but I only took 2 trades on the NQ. Right, one was a 20-tick win right here, and one right over here, right wherever it was, right here. This is a perfect storm again. Right here was a 48-tick win. So we had 120, 148. That put us at plus 68 overall on the NQ. And this was the diamond principle that we had projected from here. It hit it perfectly. I thought at the end of the session I'd put a couple more on there, projections. We'll go look at them in a minute. But for anybody that's in here that's watching on YouTube right now, let me just go over this one more time. If you haven't taken a free trial, go here to mytradingIQ.com. Click on the purple button right here. There's no credit card required for the trial. Click on that purple button. When you do, it's going to bring you to this registration page. On this page, give us your first name, your last name, your email, your phone number. 5 multiple choice questions. Right here, you have NinjaTrader. If you have it, give us your machine ID. If you have TradingView, give us your login ID. Do all that. It'll get your indicators indicating for you at the beginning of your trial. Okay, at the beginning of your trial. Now, I want to see who's watching right now and say, all right, it's all good. That's how you take the trial. All right, so back here into this. Now the projections that I made at the end of the morning session. I don't remember what markets I made them on, but it doesn't look like I made one here on the YM. I put the 3 little circles on it, I think. Oh, this is one where I thought it was going to get up to. It started to get up there, but it never finished, right? That was one. Actually, did I do that? No, looks like I just did that one. I don't know that. I don't know where I made that projection from, because this is, okay, I guess I made it here. That's what I did. I did, all the information we had at that time was right here. This is all the information we had at that time. So the projection is actually higher than the number, right? The information that we had at that time, when I put it out, it was right here at 11:30 when I put that out. And the information that we had at that time was this pullback to right here. But you see the pullback actually went longer, like that. And the time projection, I was basing the time projection out here. It worked out just about right. The time projection is a little shorter. So I would have been, you know, the time would go like this. Okay. So the time would go like that. And if we just copy that, clone it, okay, and do the same thing on the other side of it, right here. This is where the time ends up being, because it took forever to get up here, right? So the price projection is now all the way up here, but the time projection actually gets shoved out to the side all the way over here. So this is where the projection on the upside is right now, based on that time and principle. Okay, now you got the green arrow in here, where it sort of started over again by not making it up there. It sort of started over again in here. And that actually works out right now the way that it started over again, because your new projection based on this is going to be from here to here, up above here. So that actually works out. I know this is just a lot of gibberish. If you guys haven't seen the morning session, haven't really been paying any attention to when I'm talking about this stuff. But that is the price projection based on the current information that we have. That puts you right there at the same spot. Now the time element still hasn't been established. Okay, so this is probably not going to work out as far as the time element goes. It still hasn't been established. But the new projection, the new diamond based on this move. This right here is based on this right here. Okay. So for those of you guys who don't have any clue what I'm talking about, it's just price action stuff. It's how you can sort of look at the markets and get an idea where price should go based on what price has done. Now, normally, you know, the minimum thing that you would expect is this part right here. All right, you expect it to get there. And in keeping up with our motto, that is usually going to be all you need. Right? That's usually going to be all you need out of a trade. But projecting it further to complete the diamond, it should get up to there. All right. And this is your time element right here. This is your price extension element right there. Flip all that over and it brings it over here. Okay. That's how it works. So it happens again and again and again, whether you know it or not, whether you see it or not, it happens again and again and again. It's just a way for you to project what's going on. The targets that we have in here are based upon the last blue arrow. Right? They're based upon the last blue arrow, and they're based upon prior price action. So these targets, though they're great, they may be way out there, like 246.1. We've already hit that one. That was right here. The next one's 2175.4. So the next target is way up here. Right? Next target is way up here. And the next one is even further. It's up here. And the one after that is even further up there. Now, if you're just trying to get the goal for the day, then you're not going to need any of those targets because they're so far out. Okay, you're not going to need any of those targets because they're so far out. But if you want to get the most out of a trade, if you want to get in it here and ride it out to up here, then that's, it's going to take some time. It's going to take a long period of time. But that is certainly one way to project where prices are going to go. And that's what I've been trying to show you guys this morning when I made this projection down here and this projection over here. That was based on the information we had right here. The information we had right here is where that projection came from, and that projection came from. Okay. All right. So let's just get in here and trade. All right. So that's it. So we'll get into some trading here, but right now the outer band's completely flat here. We didn't put in a lower swing from these blue arrows. We didn't put in a lower swing from these blue arrows, and we didn't put in a higher swing from this green arrow. So we really don't have any place to trade right now. Okay, there's nothing going on here that you can actually trade that you would really want to get into and trade. Not anything there yet. Okay. All right. Jeff G, we have to make a time to get together. We're all booked up today, but I might have some time tomorrow for you. Okay. You gotta get your stuff working. You know what I think the problem is, Jeff, is TradingView. When you log in, if you don't, they can be, it's difficult sometimes if you have a desktop version and a browser version, or even if you just log in the browser version from different places. When you log in, sometimes it'll prompt you to use your email, and you'll see the email, but you won't see the user ID portion of it. Like if I sign out of this, let me hit cancel and save on this first. And I'll just show you. If I sign out of this, and then I come back in, I say sign in. Now it says email username, but sometimes it won't give you this option. All right, it'll give you, let me go here. We'll go here and here, and I'm all logged out. So right now, if I go in here and I hit sign in, all right, so give me the email username option. But if it didn't give me this option, the option that it's going to give you is a whole bunch of things down here that says, enter your email. And then I have Facebook and, and Reddit and Instagram and all these other things that you can log in with. And if you do click on one of those and log in with one of those and not the email or username that you've got your paid account working for, because I know you have your paid account, your premium account. If you happen to go in through Gmail or you go in through Facebook or you go in through any one of those things, it's going to create a new account that's got a different ID. And I think that that's what happened with yours, Jeff. Okay, you listen to the phone. Okay, but I think that that's what happened with yours. Is they ended up sending you through again, and you ended up creating a new account. And so we got to get you back to the one account that you actually pay for, and get everything working for you on that one account that you actually pay for. Okay, and then I don't know how you delete the other account. I don't know how to do that, but that's kind of where we need to go. Okay. Right, yeah, we'll try to organize something tomorrow. Right. I don't can't see anything in here because you're texting me on my phone, but you are responding to the questions. All right, so we don't have any trades here. So let's go and look at what we do have. All right, go out here to the number 5. So from Bitcoin's perspective right here, it is a bullish day so far, a little bit bullish day so far. Okay. I just got the message. Oh, okay, that's a trading. And I want to go out one more to 6. Let's see, Mara, if it's recovered at all. Yeah, surprisingly. Right, we had lower lows and lower highs yesterday, and then we consolidated, and now we have higher highs and higher lows, but we're consolidating again. It's taking its sweet time getting up above this level right here. There's a lot of resistance right here, a lot of sellers right in here. Okay. Okay. And all right. So that is what Mara looks like. Let's go out one more. The ZB. Now, Matt, this is what you wanted to talk about, the ZB this afternoon. And we can look at that, the ZB and the ZN. But you can see what it's doing in here. It hasn't had a ton of movement today. Now, if you start up here at the beginning when the news came out, it had some kind of movement since then, but not too much movement. All right, but we'll talk about that at 2 o'clock. All right, let's go back here and there. All right. So we're still waiting for trades to set up. We're in no trade zone here, no trade zone here, no trade zone here. All right. Does anybody want to go look at anything else? Anybody have anything? It's 1:18. We have 12 minutes left. And the markets just aren't giving anything up right now. What do we have for news tomorrow? Let's go there and check that. Or econ calendar. Tomorrow, I'm pretty sure all the news was finished today, I thought. Tomorrow. No, we do have high impact again tomorrow. Michigan consumer sentiment, inflation expectations. It's funny how they make the consumer sentiment high impact and they cut the inflation expectations down to low impact. Fed Goolsby speech at 1:25. Medium impact stuff. All this stuff coming out at 8:30 is not normally medium impact. The building permits, that's big stuff that's coming out here. And I expect it's going to be misses on all of them. Did they do any revisions last time? Yeah, they revised it. Wow. Wait a minute, let's go all the way up here. I just want to see previous and forecast. Okay, it's not showing revisions. Let me go to Forex Factory for a sec here. Go to Forex Factory. Because they will show the revisions if there were any. No, they don't have it. Usually they have a revision thing in here.
Yeah, there's today. Nothing high impact tomorrow.
Oh, we have consumer sentiment is supposed to. Okay, I have different things. One of them says consumer sentiment is high impact, inflation expectations is low impact, and right here they're both medium impact. But oh, here's the revision. Okay, so this was revised last month, but the housing starts and that stuff is what I wanted to see. Did they get revised? I don't see any arrow here. The arrow shows if it was revised. Revised down. But if we go in here, see, this is what I was saying, D. Right here, we have high impact on this one, Michigan consumer sentiment right there. That's what I show on this, but they're all showing different things. Anyway, there is news coming out at 10 o'clock. There's news coming out, a lot of medium impact news coming out on the 8:30 that used to be high impact news. I would think it'd still be high impact.
Investing.com no longer shows it as high impact because you can buy it ahead of time.
Okay. All right. Well, there you have it. The consumer sentiment you can buy ahead of time too, can't you? Well, that's your investing.com showing that is not high impact either, right?
Medium.
Yep. Yep. Okay. So price is just dragging here and not really doing anything. We don't have any trades right at the moment. I'll just wait and see if anything pops up. We have our most active markets right here. The ones that are most likely to move if something's going to move. You know, the NQ would be the one that would be most likely to move if anything's going to move, and it's not moving at all. And if I drop that down to a 7 range, maybe it would, but it doesn't even look like a 7 range would work on that. I mean, the 7 range is a spread sometimes.
Based on daily charts, we've probably seen the high of the day.
Yeah, that's what I was thinking too. Market's pretty tired right here. That move back down to the weekly trading zone on the ES is probably imminent right now, I would think. If we look over here on the higher impact, the higher time frame charts right here. We'll go to the end, and this is the ES now.
On the daily, the step line has crossed. It's crossed on the 30-minute as well.
Yep, it just crossed right here. The black step line is crossed inside, so we're bound to move back down here right now. That's totally what I'd be expecting right now, is to move back down to
based on
trading zone.
15 years of history, we should close at or below the highest weekly zone, but there are the occasional weeks where we close above.
Yeah, there have been a few of those, more than normal.
And with no high impact news tomorrow, I think the chances of price fading are probably pretty good.
Yes, and this is the 50% retracement is just beyond the highest weekly trading zone. That's 50% retracement of today's action. Okay, the 50% retracement of the last couple days. Let's see if that actually worked itself out here. Not a full 50%, but pretty close. There was a lot of news this morning that kept it from going down even further. But that's pretty much what it looks like. It looks like it's going to have a period of consolidation as it drops down, drifts down to here.
The jump in retail sales really pushed the market higher, but of course, in the retail sales numbers, they don't discuss how much of that's on plastic as opposed to real money.
Yeah, actual real money, cash.
And American, the investment banks are starting to trade credit the way they traded mortgage-backed securities back in 2006, 2007. So,
yeah, right before the crash in 2008.
Yeah. Yep.
Yes, I remember those days. Those were the days we getting $50,000 credit card offers in the mail every day.
Even though the market has moved higher, I've not changed my stance on the fact that not only is there a recession coming, but I think an actual depression. How long it will take, that remains to be seen. We could avoid it, depending upon which way the election swings. But if Barbie goes to the White House, Sad times ahead.
Oh yeah, very sad. Very, very sad times ahead in the United States if that happens. I can't even stand to watch anything.
That nuclear submarine headed to the Middle East, and the second carrier task group. I mean, if you show a side-by-side screen of her laughing, and then on the other side of the screen, controlling a nuclear submarine and 2 carrier task groups, I mean, it's unfathomable. We're living in a social media based world, which is not reality.
Yes,
If you go look at all these social media influencers with the big houses and the Lambos, of course they don't disclose that they rented the house for the day, they rented the car for the day. That's all under the radar until they get exposed.
Yes. And that's why futures are a good instrument. The best, really, because you can make money in up markets or down markets. The only time you don't make money is when it's not giving you any trading signals. Like this moment right here. But we did have plenty of opportunity this morning.
And the leverage is better than what you'll find anywhere else. And I know a lot of people are afraid of leverage because they remember the 2000.com bust when everybody became a day trader and made tons of money until they didn't.
Back then you could buy anything and it would go up. And people were buying things on margin and all that stuff.
But even though we use leverage in futures, we limit our risk with a hard stop.
Mm-hmm. And there's
but stock traders back in the late 90s, they just believed it would always come back, and it did, time after time after time, until it didn't. And we had a 50% crash down to the S&P crashed to 666.
You think about what would happen if we didn't have 9/11 happen back in 2002. It was 2002, right? Sure, it was 2001.
2001.
2001. If we didn't have 9/11 happen back in 2001, because the markets were all riding on the whole .com thing. It was right at the top of the bubble back then. And you know, the whole millennium thing, we had just gone through the whole millennium thing.
This whole next gen or whatever they're calling young people today, they don't even remember 9/11. It's something they read about in their history books. They didn't actually live through it.
Most of them aren't old enough right now.
My son was born in 2002.
Yeah, so it was Lexi was 2002, Jake and Mace were both in 2004. Yep, I remember the day it happened. I was walking my dogs, and Pamela, my wife then, was pregnant with Lexi.
And I've said it many times, but most of the money managers on Wall Street have never traded or navigated a bear market.
Yeah.
Trees don't grow to the sky, and neither do markets. So.
And we didn't have the cryptocurrency option back then.
And I thought we had begun the Great Correction earlier this month and last month, but now bulls have come roaring back. It's from a daily perspective, it looks like we simply had a deep retracement, and now we're continuing the uptrend. So we'll see what happens if we make it back to the all-time historic high.
Yes, yes indeed. All right. Well, it is about time to pass it back out to you, T. We didn't get a single off in here today. The markets have just gone sideways. It's about to give one here on the NQ. Nothing here, nothing here, nothing here.
Why don't you wait a minute for the NQ if you got time and see if it gives you a trade? So at least you have one trade
Well, I
today.
can give it a couple of minutes. I do have another meeting coming up here, but I can give it a couple of minutes. It looks like now in here right now on the larger time frame, guys, the black arrow is going to become more significant. See, it's not going to give us a trade. If this bar closes up, it's not going to give us a trade. And this last bar took, well, it didn't take that long, only a couple of minutes to make. The one before it took only a couple of minutes to make. So we'll give it a couple of minutes here and see. If we get an up close on this bar, then it's going to take a little while longer because we're going to need this to get down into the oversold. And we just got the up close. See, it's not touching the ribbon. So you're not going to get a black arrow. You're not going to get a blue arrow. You're not going to get a green arrow. You're going to get no arrow right now. Not even going to get a purple arrow because it's not touching the ribbon. The next one could be the one, but that's not going to touch the ribbon either because it didn't open down. It pulled up a little bit. So I don't think we're going to get one here on the NQD.
All right. If you want to send it back out, go ahead.
Yeah, I'll send it back out to you. I'll send it back out to you.
Okay, recap of the morning session.
Here it is. Okay, this morning, 7 minutes, one trade, $4,500.
Great job.
So you know that 4,500 with a larger time frame, that's hitting the goal with the larger time frame. The target that I had put in there is 45 ticks, I think is what it was on the YM. It's 45 ticks, it was $4,500 with 20 contracts on.
Good job.
All right.
All right, guys, we left off on the NQ. And as you can see, the NQ step line has crossed. We've not really begun the retracement yet. But once the step line crosses blue and climbing, and you can see even blue and climbing is starting to angle itself to the right. So you got potential support here, 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 here. Number of spots on the way down. Typically, in fact, considering how bullish the market seemed to be today, we could go up and tag blue and climbing, which now that it's directly above price, that becomes potential resistance. Because when blue and climbing gets directly above price, it's often on its way to becoming red and falling, which is bearish, and that will most likely walk price back down to the BVC. On crude, here's where we opened last night, right at a weekly zone, consolidated for a few hours. That's what happens 70% of the time. 20% of the times rejection. 10% of the times the slice, which I showed you earlier. Here's another one right here. We sliced through on the 30-minute chart like it wasn't even there. And it ran out of steam before it took out this high. Retraced to the zone and continued in the direction of the slice until it ran into trouble at this high yesterday. Pretty much to the tick. The high there was 78.59 and this high was 78.60. Took it out by one tick. You take out a previous swing high by just a little bit, and one tick certainly qualifies as a little bit, then that's a sign of weakness. And we're coming back to the zone. We've already come back once. Ran up to the BBC. Of course, the step line is crossed. So we've got to get below this zone, and that should take us to the BBC. And if we trade through the BBC, even though the pullback holds more often than it doesn't, okay, if this curls over and becomes red and falling on the way down, then that increases the probability that we'll trade through the BBC, and you should look for support here and here. And the bullish cross happened basically right at the weekly trading zone. So I would say there's probably the potential for crude to end this session down at this zone 77.30/35. We hit the short target and we hit the long target. Long target, of course, based off this high right here from yesterday. On gold, we opened right at a weekly zone consolidated as we do, until Blue and Climbing pushed us above the BBC just a little bit. So we get a leg, retracement, a leg, and a retracement. Pullback holds, the pullback holds, and then we get a run. It takes us right up to the CTA long target, and we spike the bearish cross. The long target was based on the bearish cross. We spiked it, and then look at that hard reversal. Bearish cross that leads to an extended move. The first time price revisits that area, even if it spikes it, will often become good resistance. And it did. It sent us down in one 30-minute candle all the way to the short target. We spiked the short target and the zone to reach the zone below at 2470/71. That gave us a leg, a retracement, a leg, and a retracement. So right now we've got support times 2. We're at the BBC and we have Blue and Climbing. So the long trade on crude right now, or I'm sorry, on gold would be 24.99 up to 25.04. $25.08, $25.14, and then $25.19. And then that would put us at the highest weekly trading zone, 25.22/23. Silver. Here's where we opened last night. Below the BBC. Even though we had Blue and Climbing, we came down to touch the zone. Remember, price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon. Price is below the BBC zone will act as support, which sent us back up to the step line, resistance, which sent us down to the next zone, which became support. That was yesterday. Then we ran into the BBC resistance, which sent us back to the zone. Support always sends us to resistance. Resistance sends us to support. Support sends us looking for resistance. And we sliced through the zone. And when it ran out of steam, it retraced right back to the zone it sliced through. Continued in the direction of the slice. Now here, this is an interesting one. We have the step line crossing Blue and Climbing, yet we still overcame Blue and Climbing, but the retracement came right back to the BBC. Next candle opens and we drop all the way to the zone below. Now, these are the zones published Monday morning at 6:15 a.m. Eastern. Keep in mind with silver, you only need 2 pennies to get your goal for the day. So this zone bounced us all the way back to the next zone, all the way up to 28.37. We got a retracement back to the zone in the BBC, support times 2, and that sent us up to the high of the session so far at 28.58. And now the step line is crossed Blue and Climbing, so look for retracement back to the BBC. On the euro, here's where we opened last night, below the BBC. So we got to move down. Okay, it's lined up with this area right here. Support sent us to resistance, sent us back to the same support. Look at the horizontal line on the cursor. Back to the BBC, and the news came out. And while it sent the US markets higher, it sent the euro all the way down to the zone below. Support sent us looking for resistance. We overcame step line and red and falling, but not enough to push us all the way up to the zone and the BBC, which would have been resistance times 2. So that shows weakness in the market. If price trades through red and sideways, then you've got potential support here, here, and then basically at the zone. The zone's actually 109,630/35. The low of this candle is 45. One last look at the daily chart. We've overcome from now the 24% fib retracement. These are the retracements based on the low of April 19th, the all-time historic high of July 16th. Okay. On this sell-off, we pushed below the 62% fib retracement. We did not take out this low. And for an entire week, that area served as good support. We've now gotten above the BBC, the 38, spike at the 24. Next resistance is at the 24% fib extension. And then the high of August 1st at 5,603/4. Next resistance is at the 38 fib extension. And then this pullback high of July 23rd at 5629.75. So again, at the beginning of the broadcast, I encouraged you, no matter what you trade, futures, stocks, crypto, Forex, ETFs, if you spend 2 minutes with the daily chart before you begin your trading session, you're looking over the shoulders of the deep pockets that actually move price. Our strategy, our indicators are not designed to outsmart the institution with their infinite resources, but to clearly show us what they're doing, why they're doing it, and where obstacles lie in the path. And so today is a day where, and we had a couple days where it wasn't quite as definitive. But if we go back to Tuesday to Wednesday, now today's Thursday, it's quite obvious that the institutional traders are buying. So is that a good time to sell? Well, I guess it depends on what kind of trader you've decided to be. In this move up, were there shorting opportunities on smaller time frames? Of course. The daily chart makes it look like price traveled in a straight line. But you know from your smaller time frames that that's not the case. Price moves with a leg and a retracement and a leg and a retracement and a leg and a retracement and a leg. Okay? So you start from the top down. Have a look at the daily chart. It's like climbing on top of your house. You can see the whole neighborhood. If you climb up on top of your car, well, actually, if you climb on top of your house, you can get a pretty good view of the whole city. If you live in a 2-story house like I do. Get on top of your car, you can see your whole neighborhood, perhaps. But if you stand on the sidewalk, all you can see is what's happening on the street right in front of you. But that's enough to get your goal for the day. So that's why it's so important as a trader to determine who you want to be. What we encourage and what we teach is to get your goal for the day and have the discipline to just put the mouse away. I know that's easier said than done. If you want to swing for the fences, you can. But One way is simple, the other not so simple. But that's a decision. Once you get your 24/20 blueprint, when you become a member, it's going to walk you through writing your business plan and your trading plan, along with a lot of other stuff, getting you ready to go live. Because you've got to learn the strategy, you've got to learn to read a chart, you've got to learn to read the indicators before you even think about going live. The 24/20 blueprint walks you through that process. Okay? If you haven't done that, and you're not hitting your number every day, go back to the blueprint, follow those instructions. They won't lead you wrong. To become a member, go to mytradingiq.com. If you have questions, call 949-42-EMINI or email us support@cfrn.net. When you become a passport holder, you'll have access to the live training room for 2 hours every trading day. Each day has its own lesson plan, plus live trading, and then on Friday, it's just all live trading. 9 out of 10 new traders fail because they don't have a teacher. No matter what career path you choose in life, baker, banker, candlestick maker, you need somebody to show you how to do the job. Yes, you can read books. Yes, you can watch YouTube videos. Yes, you can buy every indicator and oscillator under the sun. But that's no substitute for a live teacher in live markets answering every question you have. And that's your job day one when you enter the live training room. Ask every question that pops into your head. Because our methodology and strategy is quite simple. In the beginning, it looks confusing, and I don't know what a VBC is, and I don't understand the pullback, and trust me, if you pay attention and ask questions, not only in the live trading room, but in Telegram, in the weekly workshops, pretty soon the clouds will part and you can see clearly. Price gets above the VBC, just wait for a pullback to the VBC. The first pullback almost always holds. So if you're pulling back from above, you're going to be going long. If it's pulling back from below, you're going to be going short. If you can learn to keep it that simple, then you'll overcome the struggle that so many traders face. So as a passport holder, you not only get 2 hours of live training every trading day with answers to every question you have, but you also have access to private one-on-one mentoring. The strategy you learn, the indicators you own as a passport holder are fluid across all markets, all time frames. We trade every market exactly the same. Now, some people will tell you, well, that's not possible. You can't trade crude the same way you trade the ES because they have different personalities. We're not looking for a relationship. We're simply looking for a high probability, low risk trade opportunity. And price flows the same across all markets and all time frames, from support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. As a passport holder, you'll also receive the Logic 247 alerts around the clock, concierge trade alerts every night shortly after the Globex open, the weekly trading zones Monday morning at 6:15 a.m. Eastern, and you'll have access to the members only workshop, which happens every Thursday night at 8 p.m. Eastern. So Members, have your questions ready. And if you've been on the trial for the past week and you've made a well-informed and intelligent decision that becoming a trader is right for you, check your inbox. Chances are you got an email yesterday and again today with very specific instructions on how to become a member. Follow those instructions so that you get an invitation to tonight's members only workshop. As a passport holder, you have everything a trader needs, all under one roof, one low price, and around-the-clock support. mytradingiq.com. Let's wrap it up with our good word for today. This is going to hit home with a lot of traders. Beware of self-pity. 1 Corinthians 10:24. No one should seek their own good, but the good of others. Self-pity can be deadly. It tells the wife and mother who works hard, they're not appreciated. It says to the office worker, look how valuable you are, yet you're never recognized or rewarded. It says to the unemployed, no chance. To the divorced, no place. To the bereaved, no hope. And to the struggling, no way. Look at the prophet Elijah. 24 hours after his greatest victory, he's deeply depressed and wallowing in self-pity. I have had enough, Lord, he said. Take my life. I have zealously served, but the people of Israel have broken their covenant with you, torn down your altars, and killed every one of your prophets. I'm the only one left, and now they're trying to kill me too. 1 Kings 19:4. Ever feel like that? Well, there it is, self-pity in the raw. Generally speaking, there are two reasons behind self-pity. The first is emotional manipulation. We use self-pity as a weapon to guilt trip others and get our own way. That is immaturity, and you've got to deal with it, whether it's in yourself or somebody else. On the other hand, self-pity can also stem from sheer exhaustion. You've tried everything possible and nothing seems to work. Recorded in the Old Testament, God showed Elijah 4 things that were necessary to get himself back on track. Number 1, he needed more rest. Unfortunately, some of you can't find rest. But if you turn to God, he can give you rest. Number 2, he had not been eating properly. That's really something to think about. When you sit down to trade every day, are you running on caffeine and an empty stomach? Or have you had some protein that nourishes your body and gives you strength? Number 3, he had taken his eyes off God and was trying to do everything in his own strength. Now remember, this all came after his greatest victory. Number 4, he was isolated and needed a friend. We all do. You may know a lot of people. You may be surrounded by people. You may lead people. but do you have a friend? That's really important. God saw that, so he gave Elijah a friend, Elisha. That did the job. And the next time we see Elijah, he's back on top. So take a moment today and think about how these 4 truths apply to your life. Let me give them to you again real quick. Number 1, he needed more rest. Number 2, he hadn't been eating properly. Number 3, he had taken his eyes off God and was trying to do everything in his own strength. And number 4, he was isolated and needed a friend. So take a moment today and think about how these 4 truths apply to your life. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.